Hello YouTube, hello traders. Once again, I would like to welcome you to my YouTube channel. In my first video, I mentioned that in this channel I'll be sharing my journey while learning the ICT 2022 mentorship. And this is it, guys. I've started learning the ICT 2022 mentorship, and currently I've watched the first 3 episodes of the ICT 2022 mentorship. In the first episode of the ICT 2022 mentorship, ICT just introduced the course. He mentioned the things that we should expect and the things that we shouldn't expect from the mentorship. And in his second video, he talked much about the elements to trade setup, which are the things that forms a profitable trade setup. And these things involve us going into the higher time frame, which is the weekly time frame, to see the direction of the weekly candles. And this can be done during the weekend, whereby we're expecting the next coming week's trading. We can go in the charts to look for draws to liquidity, which are the swing highs, swing lows, and the gaps. Secondly, he talked about to select the daily bias, which is the direction where we think that the daily candles are gonna go. This also involves about selecting the valid short-term highs, short-term lows, fair value gaps. These are the areas where price will likely draw to. After that, he mentioned about dropping into the 1 hour time frame, where we mark the short-term highs and short-term lows. These are the areas where price will likely go to. And after selecting the short-term highs, short-term lows, which are opposite to the direction where we think the market is gonna go to, if we are perceiving higher prices, then we should look for short-term lows, which are likely to be lined to. If we are perceiving the lower prices, we should look for short-term highs, which are likely to be lined to. In these short-term highs and lows, he mentioned that there is liquidity that resides there, so price will likely go and sweep those short-term highs and lows. After selecting the potential highs and lows likely to be swept, we go into the 15-minute time frame, where we also select the short-term highs and lows, and we drop into the 5-minute, 2-minute, 1-minute to look for market shifts. And after the market shift has been formed, we look for a fair value gap in the price leg that caused the market structure shift. And in this fair value gap, it's where we take our entries. If it's a long, we take our longs. If it's a short, we take our shorts. And the stop loss can be pressed on a swing high before the fair value gap, or the swing high of the candle that caused the fair value gap. And on the targets, we look for the previous highs and lows which have not been tested, and we can also look for the fair value gaps or the gaps in the market. Those can be our targets. So without taking much of your time, let's get into the charts and see it by ourselves. Hi, so we are here, guys. As we said from the beginning of the video, that we'll be going from the weekly chart into the daily chart, and from the daily chart we'll be dropping into 1 hour chart, 15-minute chart, and finally we'll be going into the lowest time, which is 5-minute, 3-minute, 2-minute, and 1-minute. So in the lowest time, it's where we'll be looking for our setups, where we'll be looking for a shift in market structure and the formation of a fair value gap. So let's start with our weekly direction. So this pair is Nasdaq, which is also symbolized by NQH 2025. This is our weekly chart, and what we're supposed to do, according to ICT, in his second episode, he mentioned that in the weekly chart we are to predict the direction of the candle. Where the candle will close. Is it gonna close on the downside? Is it gonna close on the upside? That is, we should predict whether the candle is gonna be bearish or it's gonna be bullish. This does not mean that we should predict where the candle should reach or how big the weekly candle is supposed to be, but we should only predict where the direction of the weekly candle is gonna be. So to do that, there are a number of factors that we consider. some of them being seasonal tendency, interest rates. Those are to be learned in the coming lessons. But for now, by looking at the market structure, we can see that there is this odd low here, and there's another odd low here, and we can see that there's this odd low. So price can come to sweep the liquidity of this odd low, because under every odd low there is liquidity that resides there. So we can see that in this week, this is the week that we are trading in, and let's assume that we are in this week and we didn't know that this candle was gonna be bearish. So we are supposed to predict the direction of this candle, and this could have been on Saturday, and then we are to predict the candle of the coming week. So in order to do that, we would have marked this low here as well. We're expecting the price to go to. So we'll mark it with our trend line. We are to mark it with our trend line. And we are here, so let's mark this odd low with a trend line. We'll select this trend line and we'll come here to mark this odd low, and we can name it so we can mark it as an odd low, a low where we are expecting the price to go to. And after this, we are supposed to go into a daily time frame. We are supposed to go into a daily time frame, and this is our daily. We can see that the trend line that we pressed on the odd low has been transposed into our daily chart. So we can see this was that low which formed on a previous week, and this was another low that formed on another previous week. So here we can see that the week that we said we were expecting the price to go below this odd low has started, and yes, it has been going down. It has been going bearish. So this was on Thursday, this candle was on Friday, and this is the candle that finished the week. So we're assuming that this was the candle that finished the week. So we're assuming that we were here on Saturday and we were to predict the direction of the weekly candle. And how are we gonna predict the direction of the weekly candle? We already mentioned that we were going to follow some factors, which are seasonal tendency, interest rates, and also the market structure of the daily candles. So here we can see that on Friday it was a buy candle, and here on Monday we started with another buy candle. This buy candle went to fill this gap here, which is the fair value gap. So on a daily we can mark this fair value gap where the price wanted to go, and price went into that fair value gap, so we can give it gray color. This is where the price went to fill this fair value gap, and then it started dropping on Tuesday. On Tuesday it dropped, on Wednesday it dropped, on Thursday it dropped, and on Friday it also dropped. So we can see that the dropping of the daily candles are trying to sweep the liquidity on this short-term lows. This short-term low, this short-term low, and this short-term low. This short-term lows has been swept on Friday, and we can see that there is this another odd low which has not yet been swept. So yes, we are still expecting more prices. We are still expecting the price to go and sweep this liquidity here. We're expecting the price to go and sweep this short-term low. So now, if we were here, let's assume that we are here and we would have marked this as an odd low that we are expecting the price to go and sweep. But now that the price has swept this one, let's go into our 1 hour chart. We'll go into our 1 hour chart